Hey peeps, it's Danny here with another investing video. So been going pretty good. Obviously kind of on the rebuild, the post, you know, Trump Liberation Day flash crash stuff. So doing pretty well. I mean, uh, got some good momentum going here, up to $112,000 in stocks. I did put in a decent amount of money. I think about 13,000 ish. To really kind of help, you know, keep the ratios good. But I mean, everything fits a lot better. The NYL, the cost basis is way down, and then we resold those Zim options. 175 average, which is, it's gone up quite a lot, surprisingly. Um, but I mean, it's interesting. Freight has been actually pretty resilient. It looks like Zim's going to be paying a good dividend pretty soon, and then I mean maybe like a dollar. Who knows? I mean that's just a guess. And then depending down the road, there could be more dividends. But I mean also the interesting scenario I think with China being hit so hard, all the product is getting stuck in China. Let's say what happens, that Trump, and China come to some sort of deal. Maybe they just decide, hey, we're just gonna, you know, I don't know, and go down to zero. If they even went down to zero for even like a month or two, I bet you there's going to be this rush to move all that product. Big spike in rates could be very profitable. You don't know. I mean, I guess just looking at shipping and probably why it's up a little bit is the risk reward on it is more interesting. Clearly, there's not going to be some sort of wild cash burn, and it may actually be full year profitable. This year, even if we don't get scenarios where um, you know, where do you get that big spike? But I mean, the big spike scenarios are there for real, and it's very easy to even see how that could happen. But I mean, who knows? We'll see what happens on that. I'm not holding my breath, but we got those 175s, which are pretty nice because I mean, what happened, is that I had sold during the crash. I sold them at 150. So buying, or bought them back at 150. So selling them back at 175 means I've actually sold them at a significant profit. I made quite a lot between that. You know, Originally I think around 240. Sold, I'd bought or no sold, sorry, sold, which is the good thing. You want to sell them. Sold them at 240 and then bought them back at 150. So my net profit there between 150 and 240 is 90 cents a share. But when I sold them back again, I'm getting sort of another net profit of 25 cents. So pretty good, pretty strong, even though they're a little bit lower. But I also, bought so many extra Zim shares. I have a lot more out there. So doing pretty good on those option front. Um, Most of the washes were good, for me in that, there's the sort of right sort of washes for margin in that, like, okay, so when I sold Zim, when I bought it back even lower. So it's like, okay, let's say you liquidated a position at 14. When you're rebuying it back, you're buying it back at 13. So actually, even though you're doing a wash, you're actually still lowering your cost basis because um, the difference between your basis and what you bought at is actually still going to increase by a dollar, per the shares. So we'd actually by actually because we sold early enough in the flash crash that it went even lower, and then I rebought even lower. So both Zim and NLY had been significantly lowered. Now, I think in one of the original videos I had actually showed that I had moved NLY below 19. It actually wasn't the case because apparently I took the video too soon. They actually added my wash back in. So it pushed me up to 1972. But still, that was a pretty big reduction. Um, so that was a good wash, even still, because I've been about like 20.6 down to 19.7. I mean, the only thing that was a little off with that is that, because you can only write off 3,000 a year. Um, Now, I have a huge position, 19. Um, 30. No, I'm sorry, 19 of those. Let me see. Okay, my big problem is that I've got 19 of the 19 calls. So the price movement has been so good on that, and I think okay, so sort of the scenario is, real estate is pretty resilient, to market problems. I mean, what's the last thing people are going to fall behind on? I mean, food, but beyond that, their house, So it's pretty resilient, or rent. But so I think the NLY crash was like, okay, if we do get a wild scenario of just purely massive layoffs, which I think Liberation Day maybe gave that fear that this was going to be like a 2008 style meltdown. And then Trump moderated. It's definitely not going to be a 2008 meltdown. I mean, maybe there's going to be some employment issues, but probably not enough to wildly change the value of real estate. So just not going to be probably enough market problems to cause massive amounts of foreclosures. So that's why I think it's going back up. Is just fundamentally, there was that fear that we're going to have like a 2008 style, but crash. But my sort of problem there is that when these all get called at 19, I've got 19. So that's probably about $1,500 of loss. Now, I mean, it's not real loss because it was profit. Really. I mean, it's a funny thing is it's an accounting loss, but really quite a lot of profit in there. But one of those weird things is a profitable loss, but that's kind of a weird thing. I mean, but you have to kind of understand the basis of moving the basis, and then I mean, it's also I kind of had overbought the price on the um, I mean, I guess that I don't mind the capital loss because I've made so much off of options um, and dividends, that's been pumping above 20% yield for a while. So taking a small capital loss is not a problem. Although I would actually like to wash it even still, but I mean it just depends. Um, there's good wash and bad wash, and it depends where it's sitting, the risk reward. Because I definitely bettered my position several times on this, which is nice. Um, but sort of the problem in here, getting kind of long to the point, but the problem is that with that being so probable it's going to get called, I start to worry that I'm starting to, take on too many losses, or well, maybe not, but the problem is that this one may not be actually able to be bought back in the time frame of a month. So that may be an actual realized loss, which is fine if I realize the loss, and then outside of that I can then buy it back cheaper later during another thing. I'm cool with that, but I just don't want to be too heavy on the losses. So the big thing is I did buy TSPY back. Unfortunately, it was kind of a little bit of the opposite sort of a wash. Uh, it while what I bought back is lower than what I originally paid, it was higher than what I sold for. So it's not the sort of wash that you want to have. But on the other hand, it just kind of removed that from the thing. Plus, it wasn't a huge amount of difference. So originally, I had bought it at 23.30, and then I had during the crash have to sell it at 21 flat, and then I bought some back at 22 flat, basically. So it did add a little bit to my costs, you know, um, but it just kind of keeps me in a good place to have lots of room. So I'm good on taking losses. The other thing too is that there's a lot of scary losses here on the table for. I mean, the big thing is I mean, obviously the options aren't real losses because when they expire, you get all that money, so it's not a real loss. I mean, the worst case scenario is you get called, but then you've got because the cover calls, you're just trading the asset for that price. So, um, I mean, the big one is Zim is negative 12,000, but I mean, just have to wait for the right point to sell Zim profitably, or just not worry about it. I mean, because Zim is going to pump out many times its value in dividends over the lifetime holding, so it's not real worried about that. I got quite a lot of value because you can see on my returns I'm doing pretty well, and most of that is just Zim pumped out so much money, and with the options too, it's quite a lot, and plus my yield is pretty strong on that, all that, those options, and getting quite a lot of money over time eventually, and then with some big dividends coming, it's still pretty profitable. So I did some like swing trades, or not swing trades. That's definitely not what I did. But I did some kind of quick trades recently. Realized $34 in profit. Basically, I bought a couple of things that I decided to do some active trading. So I just kind of looked at some things that are wildly cheap and tried to just do little trades off them. And I kept one of the shares of Arbor, and then there's this Tenant Park. I have no idea, but they're very high yield, and so I basically kind of bought it and then sold it for more, and then kept one or two of the shares that was less than the cost of the trade. That's just something fun to do. And then I was gonna try it on another one, get an adventurous, but it didn't look like it was gonna work. But I liked this one, and I was a little less convinced that I could pull that off as a trade. But I was also less concerned because it's coming ex-dividend in a few days. It's a pretty nice dividend, like 70 cents per share, so that's $140. And then I just decided, hey, I'm gonna throw an option on top. Technically, the options are I sold it at a bad price, but nobody wanted to edit them at a good price. But the good price was supposed to be 65 cents a share. I managed to sell it at 50 cents a share. I saw someone else had managed to sell it at 50 cents a share. I felt like that's good value for me. Especially, you think with a dividend being paid out before the option expires, that's got to be also a reason why, people may not be as happy on it. But there's earnings coming. I think there's a decent chance. The company has had a lot of growth. I think there's a decent chance, and they have lots of earnings beats. I think it's a decent chance that it actually goes through the strike range and gets called. But we'll see. I mean, in any case, that sort of sequence, because the call is only not very far out. It's middle of the coming month. So 16th of the coming month. So that you know um, could be pretty good yield. I mean, it's like 5% really between the dividend and the option for like half a month. 5% in half a month's pretty nice. And then if you do get called, that's just a flat 5%, and then move on. But I mean, maybe I could get back in. It just kind of depends where it's sitting, risk reward. But I'm liking where it's going with this. Obviously, I don't want to be super careful on the margin, but we got some dividends coming in, and feeling pretty solid here. See where we go. Anyway, so I mean that's it for now. Obviously I'm gonna just keep working on this and maybe eventually work on some other portfolios. But I mean I've got a lot of portfolios, but I kind of really focus on one at a time, and the others. I mean the nice thing about dividends is if you're not focusing on a portfolio a whole lot, being real active with it, even still you're getting pretty good yield off of it, then you can kind of just invest that in. But this is kind of my baby right now that I'm working on. And actually it's turned into my biggest portfolio. It's now recently a big, well, I guess it's not actually my biggest portfolio because of the liquidation. I actually have bigger portfolios, for liquidation. I guess it's probably my third biggest portfolio, to be honest. But I mean, it's my biggest portfolio if you're not factoring in the options, and then the margin is my biggest portfolio. But yeah, I don't like them getting too big. So eventually, I may create another one. Close the margin and create another thing, and then you can kind of just create it from the dividends from the other ones. But we'll see. See where it goes. But this is pretty good for now. I felt like I had other things to talk about, but I don't remember them. So rather than ramble and hope to remember, I'll just call it here. All right, have a good one, guys. Take care.